Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing some in-depth stock analysis on Bed Bath & Beyond, ticker BBBY. Now this one is actually going to be a bit different to normal because I'm going to be going through a different type of trade plan I'm looking at on this stock. So to get straight into it, firstly, what are we paying attention to? So if I pull this onto a 6 month on the left, 1 year on the right, firstly, what can we see? Obviously we had that big momentum pump everyone was talking about before. We had the dead cat bounce and now just basically the sell-off we would expect. Now, we are at a 52-week low. We are really where it was kind of pre-hype, obviously, as well. It was around $4. So what are we kind of looking at? What can we do going forward? So what I'm really paying attention to is right now, statistical mean is at $2.68, and on the other end, it's around $2.12. So basically where we are now, we are considered fair value on a technical analysis basis. So right now, fair value. Now, short interest is starting to increase in this stock. Again, I'm not a big small cap trader. I don't really like trading short squeezes. I don't really like trading small caps in general. I prefer getting higher probability trade on options on larger cap stocks, but it doesn't mean there isn't trading opportunities on Bed Bath & Beyond. So the way I'm looking to trade it is I'm not going to be one of those people, you hodl for life. You think it's going to go to the moon. I think it's a stupid way kind of trading it, and 9 times out of 10 you'll lose money. But what is quite a low risk way of trading this, and how I'm going to be looking at trading this, is if we go over here to basically go over to the option chain. Now what you can see right here is basically about a 2 month out expiry, 17th of Feb. Now you can see currently in the money, getting one kind of at the money in the money is about $80. Now going out to about $30, you can see these are about kind of $8 or so. Now what, or kind of $6, $6 to $8. So basically, if kind of the way I would be looking at trading this is, okay, if you're expecting another squeeze, again, and it wouldn't be super unlikely to say this. I mean, if it's done kind of 2 big squeezes before, short interest is starting to build up once again. Is another short squeeze going to happen? Probably not to the previous extent, but if it does, again, why not be prepared? If you don't have to take much risk to take the trade, it could definitely be a good option. So what I'm looking at, obviously we're at $2 now. What I'd be expecting if we did short squeeze is, move to $20 could be quite probable. On the high end, $26. But obviously always possible that we kind of go to that previous high of around $30. So I mean, these would be really the levels I would be looking to make the trade opportunity to. If it spikes, $6 or so, I'm not going to really care about that all that much. But if it can spike to these kind of levels, I want to be in the trade, but I don't want to be holding individual shares because, again, a lot of risk is going to be on the trade to kind of make the trade worth it. But what we can be doing, or what I'll be looking at doing is, going out maybe 2 months at a time. I mean, you could go even further out, say 170 days, and you can see they're $25. In the money ones are about $120. So for this trade, for example, what you could be looking at is, okay, we buy some $30 calls. They're going to cost us, say, about $20, $25. Then what's going to happen? Okay, if it doesn't spike, we get no short squeeze. The stock doesn't really move much from where we are now. Okay, cool. We lose $25 a contract, $20 to $25 a contract. Not the end of the world. Again, you would put or what I'd be looking to is obviously risk what I'm willing to lose. It's not going to be a massive trade. I just look to put a bit of money in. Now, if it does nothing in basically the next 6 months, okay, cool, I lose that money. But if we do start to squeeze, we do get some good upside momentum in the next 6 months, then these calls, obviously, we want to break really kind of $14 above that. It will be kind of where the high profit comes. But what will happen is, obviously, these calls will obviously be spiking in price as they get closer to the money. But what will make this trade even more profitable is the implied volatility will really be increasing in these stocks. You can see right now they're kind of about 200%. But if we do start squeezing to these kind of levels, again, this implied volatility is probably going to have a heavy increase. And if it does, that's obviously beneficial because we're trading the premium. If the premium can increase even more, there's more money to be made. So that's really how I'm looking at Bed Bath & Beyond. Again, this isn't a massive analysis video on it. It's kind of just a lot of people watching this, they're either hodling or they expect another squeeze of sorts to happen. And again, this is just one of the ways I would be looking at and kind of how I'm looking at trading it. Because again, then you don't have to kind of take too much risk on the table. You know your defined risk going into it. If nothing happens, cool, you lose that. Not the end of the world. But if it does work out, definitely massive money to be made. So again, this is going out 6 months, but another way we could be trading it is trading out about 2 months. Again, looking at that $30 again, about $8. If you go to where we are now, kind of at the money ones, they're worth about $80. So again, that is 1,000% upside on the options if they kind of go to at the money of around that. Again, implied volatility is going to increase if they did push to that kind of price. So again, it wouldn't actually have to reach kind of $30 to reach 1,000 times on the options, or 1,000% on the options. You know, probably even if it's hitting $20, they're probably going to be up around that 1,000%. So again, that's kind of how I'm looking to trade it. I probably will go kind of lean more towards playing the kind of shorter expiries, you know, maybe 60 days at a time, 2 months out. Yes, they're going to decay the quickest, but again, if there's only, you know, a few dollars in the option, there's not too much to decay, and if the trade works out, they're going to move a lot more than the further out expiries. So that's probably how I'm looking to trade it. Again, don't then need too much risk on the table, but the upside is definitely still there. And again, really, once we hit kind of one of those targets, probably from $20, I'd be looking in profits, taking most of that out, because again, we know, or at least I don't imagine it would stay up at those kind of prices for long. So really, I'd probably be flipping in if the premiums aren't massively high, flipping to the puts. But if they are high, look to trade it bearish through credit spreads or debit spreads, again, depending on the premiums. And that's, again, literally what I did last time we had the squeeze. I didn't actually catch the initial squeeze, but that's how I traded the move. So again, even if you don't want to trade the initial move during this kind of strategy, which is probably what I will be doing, again, not massive size, might just throw a few $100 in it every 2 months and just see how it plays out. But also trading the debit and credit spreads on the way down, because again, they're quite low risk, high probability that they work out, and again, you tend to get about a 1-to-1 risk to reward on them. So considering that, and it's a low, you know, high probability, it just makes sense sometimes to be taking those trades. So that's what I'm looking at on Bed Bath & Beyond. Again, I'm paying more attention to these upside levels, really below $15. If I'm getting even long now, I'm not probably locking in any profits coming into this kind of level. I want it to push higher, because that's really where the big trade opportunity and the big money is going to be made. Again, might cut in a bit of profits just because that was kind of the dead cat bounce high. It is our third deviation, so locking in some profits there might be sensible. But really, again, it's all going to be down to kind of personal preference as we start to push. But again, just the way I'm looking to trade it, because we don't then have to have too much money in the trade, but the gain potential is still there. Anyway, hope you enjoyed the breakdown on Bed Bath & Beyond and the trade plan we're looking at. If you did want to drop a like and subscribe and check out this analysis video.